A successful regional business might generate a few $1 million a year, supporting a local workforce and a steady supply chain. But that scale is eclipsed by global entities that measure their reach in billions. 1 billion is 1,000 millions. A single square of wealth becomes a massive grid. This represents market capitalization, not cash in a vault, but the collective expectation of profits generated over several decades. A billion-dollar valuation is a massive financial wager on a company's future dominance. Pop culture often attributes this scale to the lone genius. We are told stories of a single founder with a dorm room idea who builds a global empire through sheer inspiration. In reality, 90% of startups fail. Even the most brilliant ideas are usually crushed by the logistical and financial gravity of the open market. Surviving that failure rate requires business engineering. A billion-dollar company functions as a machine built of 3 distinct intersecting systems: the engine, the fuel, and the fortress. To understand the world's largest businesses, we must deconstruct this architectural blueprint and see how these systems work in tandem. The engine is the core mechanism of the business, a model designed to solve a massive human problem in a way that can be replicated globally. For most of history, business growth was linear. If you wanted to double your revenue, you had to double your costs, hiring twice the labor and building twice the factory floor space to produce more units. Digital platforms broke this link. In software, the cost of adding a 10 millionth customer is negligible, allowing revenue to climb while expenses remain flat. This creates network effects. As more people join, utility increases for every member, making the platform exponentially more valuable. This engine separates companies that trade time for money from those that can grow revenue without a proportional increase in effort. A scalable engine needs a way to reach the market before competitors can react. That acceleration requires fuel. Venture capital provides this speed. Founders trade equity for upfront cash, allowing them to hire rapidly and capture market share long before the company becomes profitable. Technological leverage provides a second form of fuel. Modern cloud infrastructure and automation allow a team of 50 people to handle a workload that previously required 5,000, effectively multiplying the output of every individual employee. This cycle of hypergrowth leads toward the initial public offering, where the company enters the public markets to access the highest levels of global capital. Capital provides the time, and technology provides the leverage to achieve a dominant market position before the initial funding is exhausted. Once a company reaches a billion-dollar valuation, it becomes a target. To protect that value, the business must build the third system, the fortress, or economic moat. High switching costs create a moat by making it operationally difficult for customers to leave. When a company's software is woven into every department of a client's business, the cost of moving to a competitor is too high to justify. Economies of scale provide a different defense. A company with a massive, optimized supply chain can undercut competitors on price while still maintaining a profit, effectively pricing rivals out of the market. Brand loyalty acts as a psychological moat. High consumer trust allows a company to charge premium prices based on identity and reputation rather than just the utility of the product. Building a global giant means engineering an ecosystem where customers are incentivized to stay and competitors find no point of entry.
When a company relies solely on its existing moats and stops innovating, the fortress begins to crumble. Technological shifts can make a billion-dollar business model obsolete in months, turning defensive moats into obstacles that prevent the company from moving forward. Artificial intelligence is currently reconfiguring the modern business blueprint. It is accelerating software development and automating complex decision-making, challenging even the most established giants. In this environment, the only reliable defense is a culture of continuous adaptation. The next decade will see the rise of AI-first companies and autonomous operations that achieve global scale with a fraction of the human capital previously required. New trillion-dollar industries are emerging in sectors like autonomous robotics and the space economy, pushing the boundaries of where and how commerce happens. While the tools and the scale continue to evolve, the underlying requirement is unchanged. A business must solve a significant problem for a massive number of people. A billion-dollar valuation is the byproduct of refined systems. Long-term builders focus on the blueprint: a high-output engine, secure fuel, and a reinforced fortress.